Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, quickly we are going to revise the amendments which are applicable for your May 2025 exams. Now, sir, the amendment is regarding free replacement. If you understand free replacement, there are three parties here. One is the manufacturer of the products, the dealer or the distributor, whatever you call, and final consumer, the customer. So for the customer, we are providing free replacement. For that should be reverse any ITC like that if you get it out. For customer, when you are providing free replacement, even though the name is free replacement, whatever the cost is involved there, for that the amount you have already recovered when you have made a sale. So now when you are providing something to the customer as free replacement, no reversal of ITC required. But now the point is, sir, while doing free replacement, we are using some goods. What about that, sir? See, now understand, in this free replacement, actually manufacturer has the responsibility to do free replacement, but distributor is the person who is one point contact to the customer. So the distributor or dealer, whatever it is, sir, he is using his goods and providing free replacement. For him, manufacturer will pay money. Okay, now how do we treat under GST in this? Now one option is the distributor or the dealer will raise invoice to the manufacturer. Sir, I have used so and so spare parts here, and for that this is the GST amount. Like that, he will raise a tax invoice as if he supplied the free replacement goods to manufacturer. He will charge GST and he will pay to the department. Manufacturer also will take ITC of it, just like normal sale happened from distributor to manufacturer. This is one possibility. Or distributor is using his own goods. I told no, this own goods also he purchased from the manufacturer only. So he is asking manufacturer, sir, already I am supposed to pay some money to you. No, you raised invoice when you sold these spare parts to me. Manufacturer actually sold these spare parts earlier to distributor. So now what distributor is doing, he is using one particular spare part on behalf of manufacturer only. No, he is discharging responsibility of the manufacturer only. No, so he is asking manufacturer, I will not pay for this spare part to you. Suppose 100 silencers manufacturer has sold to the distributor. Distributor is saying, sir, one silencer I am using here for free replacement, I will pay you only for 99 silencers. Now what manufacturer will do, for one silencer he will issue credit note. So he will reduce his GST liability, who manufacturer, his output tax liability will come down. Same way, distributor would have taken ITC on 100 silencers when he has purchased 100 silencers. Now for one silencer, proportionate ITC he will reverse. So the manufacturer will raise a credit note on distributor, and distributor will reverse proportionate ITC. This is another scenario when distributor is using his own goods. Okay. Now, sir, it is not like distributor is using his own goods, sir. Manufacturer is sending his goods and then distributor is using. In such cases, manufacturer is sending the goods and distributor is using them, then obviously no GST, nothing. Or distributor is using his own stock, whatever is there, and later on when the manufacturer is sending his goods, that he is replacing in his stock. Simple. Simple. Manufacturer is sending the goods, distributor is using. Or manufacturer is saying, Ray, you use your goods, I will send the goods for tomorrow or day after tomorrow, like that. So manufacturer will send the goods and that will be used by the distributor. In such case, no GST at all, no supply, no ITC reversal, nothing. That concept will not come. Okay, this is with respect to free replacement. Now, sir, when we have seen here free replacement of goods, we have seen, and also distributor is providing service to the customer, free service, replacing this spare part, all this. Here he is also providing service. So it is free service to customer, but distributor will raise an invoice on the manufacturer. Sir, I have also provided some service of replacing the good, all that. So dismantling or installing all that stuff and all we have did. So we need some consideration for the labor charges, the service charges. That he will raise invoice on the manufacturer will pay GST and he will take ITC. Simple. That is the continuation of this replacement. Now, sir, one more important thing is, sir, in this itself we have one more thing regarding extended warranty. Let us see that. With respect to extended warranty, please understand, when you are buying a mobile phone, so when you are buying a mobile phone, they are saying that if you pay 2000 rupees or 2500, generally when you buy mobile, for display 1 year warranty they are giving, and they are saying if you pay 2500 extra, you will get 2 years extended warranty. So at the time of purchase of the mobile itself, anything, any product, I am giving example mobile phone, at the time of purchase itself, if you are taking that extended warranty, sir, who is giving the extended warranty? Supplier only giving extended warranty, sir. I am buying mobile in Sangeeta Mobiles and the Sangeeta Mobiles itself is giving me extended warranty. Na? Then, sir, they are selling mobile also, they are selling extended warranty also, they are selling back case, everything also. So it is like part and parcel of composite supply. Predominant supply is selling mobile phone, so that itself will be the tax treatment. No, sir, extended warranty alone separately sold by, let us assume, some Bajaj finance fellow or somebody. Sir, in such cases, some third person is selling the extended warranty. then it is a separate supply. You will be taxing it as supply of service and will be charged to tax accordingly. Okay, this extended warranty when you are taking at the time of buying the product itself. No sir, after the product is purchased, later on we are taking extended warranty. In that case, no matter whether the seller is only giving you extended warranty or some other third person is giving you extended warranty, so it is altogether a separate supply and it will be taxed as supply of service only. Okay, that is what the concept of extended warranty. The next one is, please understand, GST on preferential location charges. Preferential location charges. See, for example, when you are buying an apartment, sir, during the construction itself, you are asking, sir, I want the apartment in 10th floor, east facing. Like this, sir, you are asking some preferential location charges. You are paying something extra for a preferential location. What is the tax treatment for that? Sir, nothing but whatever when you are buying that apartment or anything, sir, whatever the tax treatment is there, the same tax treatment is applicable even for preferential location charges. That is what the concept. Next one regarding employee stock option plan. See, understand here, I will explain this with a flowchart here. See, generally what happens is, generally, sir, the domestic company in India, which is a subsidiary company whose holding company is abroad. The domestic company in India is offering its company's employees the shares of the holding company, that is the foreign company. Okay, so they are offering it as a ESOP or whatever it is. Okay, employee stock option plan. For that, shares are directly allocated by the holding company, that is the foreign company, to the employees of subsidiary company. Now, for this, sir, what is the tax treatment? Now, please understand. See, first of all, offering the stock, the securities to employees, this is not at all a supply because it is transaction securities. But for this, subsidiary company is paying the consideration, correct? If they are paying exactly the cost, whatever they are reimbursing, the cost for the securities of foreign company, that is the holding company, then as I told, it is transaction securities, it is not at all a supply. But if they are paying anything additionally, the subsidiary company in India is paying something additionally to the foreign company other than the cost, then it will be treated as supply of service and GST shall be payable as if the subsidiary company in India has imported some service and GST shall be payable under reverse charge mechanism. That is what the concept. Very, very simple amendment. Next one, sir, a new entry in RCM goods, that is, if you are purchasing metal scrap from an unregistered person, then you should pay GST under RCM. So, RCM goods, one extra entry has been added. New entry in RCM services, that is, sir, renting of commercial property. We have seen renting of residential property 5AA, this is 5AB. Renting of commercial property by unregistered person to a registered person, then only RCM. But if you see renting of residential property, any person renting it to residential property for business purpose to registered person, then only RCM. 5AA is different. 5AA, supplier can be any person, recipient should be registered. Residential property for business purpose. But entry 5AB, renting of commercial property for, of course, commercial purpose only. Supplier should be definitely unregistered, recipient should be definitely registered. So supplier unregistered, recipient registered, then only RCM. Please be very careful here. Next one, place of supply, section 10 subsection 1 clause CA, sir, where the supply is made to an unregistered person, place of supply shall be whatever the address recorded in the invoice, that will be the place of supply. But the problem here is, now when the supply is made through e-commerce operator, in such cases, if the billing address and shipping address are different, then what shall be taken as place of supply? Sir, whatever the address mentioned in delivery, that is the shipping address, delivery address will be taken as place of supply, not billing address. Please be careful, for unregistered person, when the sale is made through e-commerce operator, the delivery address will be the place of supply but not the billing address. The next one is, see, the banks are providing various services for foreign portfolio investors, like custodial services, all the stuff regarding their securities, everything. Sir, here please understand, whatever the services banks are providing are not the services provided by banks to their account holders. So place of supply cannot be determined under section 13 subsection 8 because they are not account holders, the recipients. So the law says, the clarification here is, the place of supply shall be determined under general rule, that is 13 subsection 2, not 13 subsection 8. So the next one is regarding clarification of place of supply, on place of supply for advertising services provided to foreign clients. Now see, for example, first of all, sir, there are foreign clients like Netflix, all that, and they want to advertise their service or product, etc., in India, in Indian media or the news channels, all that stuff, TV channels. Okay, in Indian media. For that, they are taking the services of an Indian ad agency. So the Indian ad agency is taking full responsibility regarding content creation, media planning. That means in which media channels it should be advertised, how it should be advertised, all that stuff, and what is the investment per things. Everything, complete responsibility is taken by Indian ad agency. Now, sir, in this scenario, we got some doubts. The doubts are, first one, whether this Indian ad agency is acting as an agent for this foreign company. Please understand here, Indian ad agency is taking full responsibility. They are acting independently on their own and they are providing these advertisement services. For that, whatever they want, they are taking from foreign company. So here you cannot say Indian ad agency is acting as an agent. Okay, this is number one clarity. So for this, what is the place of supply? So for this, the place of supply shall be determined under section 13 under section 13 subsection 2 as per the general rule, because here you cannot bring 13 subsection 3 performance based services. All that, can I call this? No sir, because here any physical presence of goods is not required. So Indian ad agency is providing generally services exporting to foreign company, that is the foreign client, and they are providing services. Place of supply will be as per 13 subsection 2, not as per 13 subsection 3. So this is not performance based service. This is another clarity. Next, another issue is, sir, for this Indian ad agency, who is the recipient? Who we can call as client? Who we can call as recipient? Sir, for this Indian ad agency, the services are received by, like, can I call the representative of foreign client, Netflix representative, anybody in India, can we call them as customer? Or Indian audience or the targeted audience of Netflix, can we call them as customers for this Indian ad agency? No sir, who is paying consideration for this Indian ad agency? Sir, Indian ad agency is getting payment from the foreign client, that is Netflix example. Sir, for Indian ad agency, the customer, the recipient is the foreign client who is liable to make payment of consideration. So that fellow is the recipient. And finally, another issue is, what if Indian ad agency is acting as an agent? Actually, in this entire discussion, Indian ad agency is not acting as an agent. What if it is acting as an agent? What shall be the place of supply? Sir, if it is acting as an agent, obviously place of supply will come as per section 13 subsection 8. This is the clarification, simple. And regarding that, yes, in our material also, amendment material, yes, I have given issue 1, 2, 3, 4, all that, and we have discussed them also. So the next one, if you see, sir, the data hosting service providers in India are providing data hosting services to various foreign cloud computing service providers. In this aspect, the doubt is, what is the place of supply? Is it renting of immovable property, and should we determine place of supply accordingly? Actually, the clarification is, sir, when you are providing data hosting services, you are not just renting any data center. Actually, you have to provide various other things like, yes, maintaining the data centers, and like the security of that particular data center, uninterrupted power supplies, the firewalls, security, all that. And next, let us assume backup generators, operating data centers, IT management, firewall services, like this. Sir, there are so many things involved in this to provide this data hosting services. So here, this shall be treated under normal section 13 subsection 2, the place of supply. Okay, right, that is what the point. This is not renting of immovable property. So now the next one, if you see, sir, the new exemption entries in CGST Act. See, first of all, one segment we'll see new entries regarding Indian Railways. Sir, Indian Railways are providing services by way of sale of platform tickets, facility of providing this retiring rooms or waiting rooms. You will be seeing now where you keep the luggages, clock rooms, all that stuff, and waiting halls, all that. For that, you will be paying some consideration, and some battery operated car services you will be seeing in railway stations. Okay, the platforms. So these services, for that they will charge some nominal consideration, that is exempt under GST. Okay, this is one new entry. Another entry is, sir, there are various zones and divisions in Indian Railways. Okay, like for example, South Central Railway, Southern Railway, East Coast Railway, all that stuff. So like that, one zone to another zone or one division to another division, providing any services, that is also exempt under GST. Okay, this is next one. Next, 9G, special purpose vehicles. Here if you see, sir, there are some special purpose vehicles which are formed and they are constructing the railway stations, and after a particular period of time they will hand over it to Indian Railways. But during that period, who is owning this particular railway station? Any railway station constructed by special purpose vehicles, they are owning that railway station for a particular period of time, and during that period they are allowing Indian Railways to use that railway station. And for allowing them to use railway station, Indian Railways will be paying consideration to special purpose vehicle. How they are paying consideration? Now they are paying consideration in non-monetary form, that is maintenance of railway station is taken care by Indian Railways. That means special purpose vehicle will construct a railway station and allowing Indian Railways to use that railway station. For that, consideration is paid by Indian Railways in the form of maintenance of that railway station, that is exempt under GST. Next one, regarding this renting of the premises. See, understand, renting the residential premises, obviously we know exempt under GST. But sir, just like hostels, all these things, guest house, etc., whatever you call PGs for the students, etc., where the consideration, please understand, there are two conditions here. One is the consideration should be less than or equal to 20,000 per month, and there should be a continuous stay for a period of at least 90 days. That means greater than or 90 days, greater than or equal to 90 days if you are staying in those hostels where you are paying consideration. The rent for the hostel or PG is less than or equal to 20,000 per month, then that is exempt under GST. Clear? I repeat, two conditions. Number one, consideration should be less than or equal to 20,000 and the stay should be greater than or equal to 90 days. At least 90 days you should be there. The next one, electricity transmission and distribution utilities. So here they are providing various services like metering the equipment. Metering equipments will be given on rent, or testing your meters, transformers, capacitors, all that, releasing the electricity connection, or labor charges for shifting your meters, etc., or service lines. Or the fifth one, there is fifth point there, issuing the duplicate bills, all that. For this, if they are charging any nominal consideration, that will be exempt under GST. Next one, see, any person providing research and development services for consideration received in the form of grants from any government entity or research association, university or a college, which is notified under section 35 subsection 1 clause 2 or 3 of the Income Tax Act 1961, then it is exempt. So you are providing research and development services because you have received grants from either this government entity or the notified universities or colleges, etc., as we have discussed here. See, the next one is regarding, see, the central state educational boards are providing affiliation to various schools. See, understand there is an exemption, and regarding that there are clarifications. First of all, what is the new exemption now? The central or state educational boards providing affiliation to the government schools are exempt under GST. And there was a clarification regarding, sir, is it exempt only for government schools? Yes, it is exempt only for government schools. So for any other private schools, all that, that means schools owned by central government, state government, union territory, local authority, governmental authority, or government entity, then only it is exempt the affiliation services provided by central board or state educational boards. If it is provided by universities to its colleges, then it is taxable. If central and state educational boards are providing it to private schools, then also it is taxable. This is regarding the clarifications there. And there is one more clarification regarding the services provided by flying training organizations. Sir, they are providing various flying training courses where the certificate is recognized as per DGCA norms, all that stuff. So whether this is treated as educational services and whether it is exempt under GST, yes, of course it is exempt under GST. Services provided by flying training organizations in way of providing various flying training courses which are recognized actually as per Aircraft Act 1934. So it is a recognized qualification under law. So obviously education services exempt under GST. That is what with respect to this particular segment. Right, the next one is with respect to the new entry in IGST Act. Actually, the foreign airline company who has located in India. So the foreign airline company in India is importing services from its related person or own establishment located outside India. Any service importing by the foreign airline company in India from its related person or own establishment is exempt under GST, provided three conditions are satisfied. Number one, the first condition is, sir, this foreign airline company is paying GST in India for the services of transporting the passengers and goods, of course. Next, number two, Ministry of Civil Aviation is confirming this is a foreign airline company belonging to a foreign country with which Indian government has this bilateral air services agreement. This is number two. Number three, Ministry of Civil Aviation is also confirming that Indian airlines in that particular foreign company are also provided similar type of relaxation in that particular country for same services with respect to taxes. Okay, they are also giving relaxation for Indian airlines. Here we are also providing relaxation for that foreign airlines. Okay, so that is what the condition. Next, if you see, there are some amendments in existing entries, just the changes in names, all the stuff. Apart from that, nothing majorly like structural changes. See, understand National Skill Development Corporation, NSDC, or National Council for Vocational Education and Training. These people are the awarding body recognized by NCVET or assessment agencies recognized by the NCVET, or training bodies which are accredited by this, accredited with the any awarding body that is recognized by NCVET. NCVET, remember that. Okay, National Council for Vocational Education and Training. Sir, they are providing any service in relation to obviously national skill development programs or any other programs implemented by NSDC or any other vocational skill development courses, of course, by this National Skill Certification and Monetary Reward Scheme or National Skill Qualification Framework, all that stuff, which are recognized by NCVET, all this stuff. So these are exempt under GST. Earlier there was Sector Skill Council, now they are renaming it, all the stuff, and you are seeing the different names. That's all. Apart from that, exemption is same. Next one, earlier same services like training providers providing training services under Deen Dayal Upadhyaya Gramin Kaushalya Yojana, under that scheme. Earlier there was only the word skill or vocational education, now they have added training also. Sorry, earlier there was skill or vocational and training courses, now they have added the word education. Apart from that, this is nothing but the same entry. So these are the changes in existing entries, just here and there some small names have been changed. Next, there is a clarification regarding the statutory collections made by RERA. See, understand statutory collections made by RERA. The department has clarified RERA is also a governmental authority. Whatever the services they are providing by way of collecting the statutory dues, all the stuff, that is also exempt under GST. Next one is regarding, see, the clarification regarding the loan granted by related person or overseas affiliates to its Indian entity. Now, simple, see, understand. Whenever some banks or financial institution NBFCs are giving any loans to anybody, sir, they will charge processing fees. Why? Because to see his like repayment capacity, they will do various documentation, etc., etc., and they will do background verification, all that, correct? For that, they will charge processing fees from the borrower. Okay, this is obvious, and that is taxable under GST. You know, loan processing fees is taxable, only interest is exempt, but credit card interest is taxable. But here, sir, when related person or my overseas affiliate, which is there abroad, is providing loan to Indian entity, why will they charge loan processing fees? Because we know, sir, it is our own entity, correct, located in India. Sir, why will we verify about them, the background verification, all that? We will not charge processing fees. Now, here you cannot say, sir, in this case, importation of service is there. What service taking the loan? For that, these people are not charging processing fees. So, this is importation of service without consideration. Schedule 1, para 2 and 4 will come into picture. This is called as supply. Like that, you cannot say because, sir, in this case, this is my own related person or my own affiliate abroad is giving me the loan. So in that case, they won't do any background verification. Processing fees concept itself will not come. So the department has clarified it cannot be treated as supply. You cannot say this is importation of service without consideration. These people did not pay processing fees, but they should pay GST on this. Like that, you cannot argue. It is not subjected to GST. Okay, there is the another clarification. Another clarification, just remember reinsurance term includes retrocession. That's all. So if you see the word retrocession, yes, this is included in reinsurance and it is exempt under GST. We have seen reinsurance services for notified services like general insurance services. Some services we have seen no in exemption. So entry 35 and 36 will talk about that. There the reinsurance word has been used and reinsurance service includes retrocession. So if you see anything like that, it is exempt under GST. Just remember that. So the next one, if you see there is something called Central Public Works Department who has the responsibility of maintaining the public parks in the government residential areas or near government offices and public areas, all that stuff. For them, any private person providing services by maintaining these public parks, etc., etc., maybe it is a purely 100% service or 75% service and 25% of goods like composite supply. So that is exempt under GST. Okay, so private person providing this like maintenance of by way of horticulture or horticulture works regarding that to CPWD, that is the Central Public Works Department. For them, whatever the service is provided, purely service or 75%, 25%, 75 service and 25 goods, that is also exempt under GST. That is one thing there. And the next one is, sir, there is something called District Mineral Foundation Trust, which undertake the complete responsibility of the people who are residing in the areas which are affected through because of mining operations, all that. So people residing in those areas, for those people regarding the health or education or welfare of women and children, supply of medical equipment, all these things are provided by these particular entities. And please understand, these DMFTs are established by state governments and they are very much governmental authorities. Whatever the exemptions are available to government authorities, so they are also equally applicable for this DMFT. That is the another clarification. You understand? The next one is, if you remember, the services provided in relation to GTA, all the stuff are exempt under GST. So the loading, unloading, packing, unpacking, transshipment or storage, temporary warehousing of these goods, these services provided like this by GTA is also nothing but part and parcel of transportation of goods by road. So this is also like what will form part of services provided by GTA and they are taxed accordingly. This is one thing. Sir, no matter what is the method of invoicing done by GTA. So these and all will form part of GTA services. Suppose if these are not provided as part and parcel of GTA services, not provided as part of transportation of goods, they are separately provided and invoiced accordingly, then they will be taxed accordingly. Next one is regarding time of supply for allowing spectrum usage or allowing the telecom companies for using the spectrum by the government. What is the taxability or time of supply? You know, these are services provided by government, hence taxed under RCM. Now, sir, the spectrum usage charges for that telecom companies are paying the entire consideration upfront in that case, or telecom companies are paying that spectrum usage charges in installment. Both the cases, please understand what is the time of supply. The time of supply is when that payment is due or made, whichever is earlier. And this provision, this clarification is equally applicable for all the natural resources allowed by the government to be used by any other person. Okay, so this is equally applicable for allocation of all other natural resources by the government to others. Okay, so what is the time of supply? Payment made or due, whichever is earlier, both for upfront payment as well as installments. Next one, if you see, sir, there are various builders who are we calling as concessionaries who are constructing the highways. Sir, I'm providing services to National Highway Authority of India under design, build, operate and transfer model, DBOT model, which we are calling as hybrid annuity model. Sir, where they are providing services of constructing the roads and then operating them and then they are transferring them. In these cases, sir, this is going over a period of time like 15 to 17 years. In this case, sir, NHAI is making payment to these people. What is the time of supply for that? For that, the department has clarified this is similar to continuous supply of services. So you should see whether invoice is raised within the time limit or not and follow time of supply accordingly. If invoice is raised within section 13 subsection 2 time limit, then invoice or payment, whichever is earlier, or if the invoice is not reached within section 31 time limit, then the date of completion of service or date of payment, whichever is earlier, as the case may be. So this is simple, nothing but treat it as continuous supply of service and time of supply shall be calculated accordingly as per section 13 subsection 2 of CGST Act 2017. See, the next one is nothing but the director of the company is giving a guarantee for the loans borrowed by the company. In such case, what is the value of supply? Director and the company being related persons, or anything happening between them, yes, value of supply shall be determined as per rule 28, and it will be open market value. But understand, when the director is giving guarantee to the company, please understand the RBI guidelines is director should not get consideration for that. That means for such cases, actually there is no consideration and hence there is no open market value. So value of supply is nil. But sir, in certain exceptional cases, yes, director can get consideration from the company, and in that case, obviously, whatever the remuneration is getting in exceptional cases, whatever the remuneration is paid by the company to the director, that will be taken as value of supply. So director giving guarantee for the loans taken by company. What is the value of supply? Open market value. As per RBI guidelines, no consideration should be paid. So no open market value, and hence value of supply is nil. So in exceptional cases, we will pay consideration, then whatever the remuneration you paid for giving the guarantee, that will be the value of supply. This is director giving guarantee for the borrowings of the company. So now we have seen director giving guarantee to the company. So now one company giving guarantee to another company, holding company to subsidiary company or anybody. So giving guarantee to a company located in India. That means the borrowings taken by a company located in India, for that you are giving. So earlier we have seen director giving guarantee. Now this is corporate guarantee. In that case, what is the value of supply? The value of supply is 1% of the amount for which you have given the guarantee or actual consideration what you are getting paid, whichever is higher. Okay, that is what the value. But one interesting point here is if the recipient is eligible for 100% ITC, then whatever the amount declared in the invoice, that will be the value of supply. That means whatever you are charging, that itself will be the value of supply. Okay. So now here if you see one example, sir, there is a company called Vaikunth Limited, subsidiary of Mahavishnu Limited, and they have borrowed 100 crores from HDFC Bank. Now Mahavishnu Limited has given guarantee for that, and Mahavishnu Limited is giving guarantee for that to the bank, and for that they are getting 25 lakhs from its subsidiary Vaikunth Limited. Now, sir, as you know, 1% of the amount for which guarantee is given. So 1% of 100 crores or 25 lakhs, whichever is higher. Sir, 1 crore is higher, that will be the value of supply. But if Vaikunth Limited is eligible for 100% ITC, 25 lakhs itself will be taken as value of supply, as that is the amount which is declared in the invoice. Okay, so that is regarding value of supply for corporate guarantee. Here, there are certain interesting points. Sir, what are those points now? Sir, there are various possibilities if you see. Number one, sir, I gave guarantee for 100 crores, but they have taken loan only of 40 crores. How much loan they have taken, it doesn't matter. How much amount for which you give the guarantee, that is what matters. How much loan they have availed, it doesn't matter. Okay, that means they might have fully availed the loan or partly they have availed the loan, it doesn't matter. You gave guarantee for 100 crores, so value of supply will be 1% of 100 crores, not on 40 crores. Next, sir, in case of takeover of existing loans, for example, now the company has taken loan from HDFC Bank. Now this has been taken over by ICICI Bank. So for ICICI Bank, I am giving the guarantee now. So please understand, when there is taking over of existing loans, again this GST applicability will not come into picture because there is no fresh loan, or technically speaking, there is no fresh guarantee. This is second possibility. Next, the third one is, sir, what about intra-group companies giving guarantee? That means one domestic company giving another domestic company, the group companies giving guarantee to another group company. So if it is provided by domestic company, so one domestic company to another domestic company, just like supply, normal supply, yes, you will charge GST as per the value we have discussed here. But if the company is located outside India and providing this guarantee to company located in India, then it will be treated like importation of service. RCM will come into picture, and the domestic company which is receiving that guarantee will pay GST under RCM. This is third possibility. Now, sir, what if I am giving guarantee for the borrowings of a company located outside India? This is like export of service, and we know these provisions what we are discussing are not applicable for the guarantee given to a company outside India. Sir, this is only when guarantee given to a company which is located in India, these provisions will come into picture. That is the fourth possibility. Okay, this is export of service and these provisions are not applicable. Next, number 5. Guarantee given for multiple years. As I told, Mahavishnu Limited has given guarantee for Vaikunth Limited for 5 years for that 100 crores. Each year we should calculate this value 1% or actual consideration, whichever is higher, and we should discharge the GST liability accordingly. Okay, next, the last possibility. What if the corporate guarantee is given by multiple entities? And one more thing, small point. Sir, in fifth point, we have said for multiple years it is given, you should calculate every year this one. What if in the same year it is given just for a particular period of time? For example, sir, loan amount 100 lakhs, guarantee given only for 4 months. Sir, proportionately you should calculate. Sir, 1% of 100 lakhs into 4 divided by 12, you will get 4 lakhs. But for that, I have paid consideration of 2 lakhs. Whichever is higher, 4 lakhs is higher, value of supply will be 4 lakhs. That means, sir, guarantee is given for whole year, na, calculate it accordingly. No, it is given just only part of the year, na, proportionately you will calculate. No, sir, it is given for multiple years. Every year you calculate this and you pay GST accordingly. Okay. Next, the last possibility is corporate guarantee given by multiple entities. That means, sir, for the 100 crore loan, A Limited is also giving guarantee, B Limited is also giving guarantee, sir. A Limited is giving guarantee for 60 crores, B Limited is giving guarantee for 40 crores. Then A Limited will pay GST for 60 crores, B Limited will be liable to pay GST. Sorry, on the guarantee given by A Limited for 60 crores, separate GST calculation. For 40 crores, separate GST calculation. Yes, they will be liable to pay GST accordingly, A Limited and B Limited, as the case may be. Okay, so that is what the last possibility. So this is with respect to corporate guarantee also. See the next one, if you see, sir, what about the head office providing services to the branch offices for the internally generated services? Should the head office raise invoice under section 31, and whether the cost of the employees of head office should be included in this particular value of supply is the doubt. Now here, I'll just simplify this clarification. Head office is making supply to branch office. What should be the value of supply? Please understand, if branch office is eligible for 100% ITC, if invoice is raised, well and good. Whatever the invoice is there, that itself will be taken as open market value, and that will be the value of supply. Sir, invoice itself we have not raised, sir, for the raised, sir, for the services provided to our branch officers. Then invoice itself is not raised, no problem. Still, we will treat open market value as nil, and that will be the value of supply. Okay, so this is what the concept. The same thing applied for head office providing services to branch offices in India. Head office is located outside India. Same treatment for services imported from related person also. Okay. Now, sir, head office is providing supply to branch office, and what is the value of supply if branch office is not eligible for ITC? If branch office is not eligible for ITC, yes, raise the invoice, but raising the invoice, please understand, adding the employee cost in the invoice is not required. Adding the employee cost in the invoice given by head office to branch office is not required. If you are not adding the cost of employees of head office also, it is absolutely fine. So that is what the concept. So as I was telling, sir, the same treatment for services imported from related person also. So if the invoice is issued, then whatever is the invoice value, that will be taken as open market value, and GST shall be paid by the recipient under RCM. If invoice itself is not issued, open market value will be taken as nil, and nobody will pay GST. Okay, so that is what the concept. Now the next one is with respect to uh, sir, online gaming and online money gaming, and also the actionable claims in casinos, the lottery, betting, gambling, all these things in casinos. For that, what is the value of supply? Please understand, sir, whether it is online gaming, online money gaming, lottery, betting, gambling in casinos, the value of supply shall be whatever the amount you are depositing initially, either to play the game or betting, etc., etc., or you are buying something, coins, chips, tokens, whatever you call, whatever the amount you are depositing for buying these things, that amount, let us assume 10,000 you have deposited to play the game or lottery, betting, gambling, whatever it is, to buy the chips, tokens, etc., coins. That 10,000 will be the value of supply. Okay, that 10,000 will be the value of supply. Sir, I have used only 8,000, sir. Later on, they have refunded 2,000. That will not be excluded. Whatever you have deposited initially, that will be the value of supply. Whatever it has been refunded to you, returned to you, that and all, we will not minus. This is one interesting point. So, number one, whatever you have first initially deposited, or how much ever first initially you have purchased the coins, tokens, coupons, whatever it is, that will be value of supply. Whatever has been returned or refunded to you because you have not played the game, all the stuff, that and all will not be considered. That's all gone. And one more interesting thing is, if you are earning something, for example, you are 10,000, you have earned 20 lakhs, and you are continuing the game, then that whatever you are continuing all the stuff, sir, without withdrawing whatever you are doing, we will not ask you any GST. But you have invested 10,000 first, we charge GST, and it became 20 lakhs, you are withdrawing 20 lakhs. And again, you thought of playing back, and again, you are depositing. Then again, when you are depositing, the 20 lakhs will be taxed. Okay, so without withdrawing, if you are continuing the game, then it will not be subjected to GST. That is what the concept. Suppose here you see example, here one more interesting point is, sir, not only the cash what you are using, any cryptocurrency whatever you are using, that also will be added for purchasing that coins or for playing the game, whatever you are putting, either it is normal cash or virtual cash, that is the assets, virtual assets like cryptocurrency, all the stuff, that is also to be considered. For example, here you see you have put 10,000 and you have put 20,000 worth Bitcoin, so total 30,000 is the value of supply. Later on they have refunded 5,000, that we will not consider, we will charge GST on 30,000, value of supply will be first case 30,000. And what happened, like using these chips, all this stuff, sir, you have won 60,000 and played by using 40,000 and you have withdrawn 20,000. Okay, sir, whatever you have continued, we will not consider, sir. You have withdrawn that 20,000, no. And now after withdrawing 20,000, later on again you are putting up 15,000 out of that. Again you are depositing, then that 15,000 will be taxed. So that will be the value of supply. So first whatever 30,000, that is 10,000 cash and 20,000 Bitcoin is value of supply. Later on you have withdrawn your winnings and again you are investing back, no, that 15,000, that itself will be value of supply again. So there are two value of supplies, 30,000 and 15,000. That is what the concept with the example. Now the next one is, if you see, sir, what is the tax treatment in case insurance companies are settling the claim where there is some salvage or wreck balance left with them. Now see, for example, sir, there is a car which is met with an accident and its salvage value, now if you sell it as a scrap, it will recover 1 lakh rupees. So there is a salvage value, okay, and the insured has declared the value as 8 lakhs. So now the insurance value is 8 lakhs. Now the car is damaged. Imagine insurance company is only paying, hey, the car will give you 1 lakh, however you go and sell the car and you recover 1 lakh, I don't care, I will pay you only 7 lakhs. So like that insurance company has paid 7 lakhs. Now insurance company doesn't have any connection or responsibility with respect to that salvage value or wreck value of that particular car. So insurance company doesn't have any responsibility to pay tax on that salvage. Now sir, suppose if insurance company is fully paying 8 lakhs, what insurance company will do? Insurance company will take full that balance, whatever the damaged car is there, accident car is there, that insurance company will take fully and will pay 8 lakhs and get lost, like that it is saying to the customer. Now insurance company is having the property in that car, in that salvage or wreck. So now insurance company will pay, sell this car in future, no. When they are selling this car in future, on that insurance company is liable to pay GST. Simple. So simple, insurance company is deducting the salvage value and paying it to the customer. Now then the salvage will become the property of the customer. Customer will take care of the GST, all that stuff if applicable. But insurance company is paying full the insured amount. That means the salvage or wreck will become the property of the insurance company, and the insurance company has to discharge the tax liability on that salvage or wreck, nothing but scrap run, whenever the insurance company sells this particular salvage or wreck. That is what the next clarification. So the next amendment is with respect to 16 subsection 6, the new section in input tax credit. If you see, sir, the section is all about 16 subsection 6 is all about, see, when your registration is being cancelled and you are applying for revocation, during that time what is happening, sir, when you are cancelling when your registration is being cancelled, you have time limit to avail ITC under 16 subsection 4, but at the time of revocation, still whether the time limit is available, still you are able to take ITC. Yes sir, I am able to take ITC. Then happily you can take ITC as per 16 subsection 4, 30th November of the succeeding financial year or actual date of filing annual return, whichever is earlier of the relevant financial year. No sir, at the time of cancellation of my registration, I had this 16 subsection 4 time limit still active, but at the time of revocation, 16 subsection 4 time limit is over, sir. Then what should I do? 16 subsection 6 is giving a time limit to you. Even though your time limit under 16 subsection 4 for availing ITC is over, at the time of revocation of the cancellation of registration, within 30 days you file all the pending returns and you happily enjoy ITC whatever has been expired, but the time limit is now as per 16 subsection 6. Now the next one is with respect to ITC availability on demo vehicles purchased by dealers of cars. Now please understand, first of all, if the dealers of cars are purchasing the demo vehicles, purchasing the vehicles and using it as demo vehicles, sir, first of all, he is into the business of buying and selling the cars. So obviously he can take ITC. ITC is not blocked under section 17 subsection 5. But sir, there is another possibility that where the dealers of the cars are not actually acting as like buying and selling on their own capacity. They are just acting as the agent of the manufacturer. In that case, they are not buying and selling cars. So if they purchase any car and use it for demo vehicle, use it for marketing activities, use it for transportation of the staff, etc., etc., here they are not into purchase of buying and selling cars. Hence, the ITC is blocked on the demo vehicles for them. So simple, dealer is buying and selling the cars, demo vehicles, he can take ITC. Dealer is not buying and selling cars, he is just acting as an agent of manufacturer, then he cannot take ITC. The next one is with respect to clarification regarding, sir, if it is an RCM purchase what I have made, on that what is the time limit to avail ITC under section 16 subsection 4? You know 16 subsection 4 time limit talks about, yes, purchases covered under RCM also. But what is the relevant financial year? The relevant financial year is nothing but, see here, when the recipient is liable to raise the invoice, obviously the year in which the recipient who should have raised the invoice, that itself will be considered as relevant financial year. So section 31, the time limit to raise invoice will be applicable, and the recipient should have raised invoice accordingly as per section 31 provisions, and should have paid GST and should have taken ITC. Okay, so 16 subsection 4 will come into picture. Suppose if the recipient is not raising the invoice within the time limit, obviously, sir, there is delay in raising the invoice, delay in payment of tax, then the interest penalty under section 122 will come into picture. Whether ITC is available on ducts and manholes used in construction of this optical fiber cable networks? The answer is yes. Ducts and manholes are very much treated as plant and machinery, and hence if you are purchasing them for construction of optical fiber cable network, you can avail ITC on them. Now the next amendment is with respect to the insurance companies. Normally, you know, when there is any accident, etc., for the repairs, all the stuff, the insurance companies will make settlements, correct? For this, sir, the insurance companies will bear the cost of repairs. In this, sir, there are two types of settlements. One is cashless settlement, the other is reimbursement. Cashless settlements, then the vehicle will be taken to the garage which is within the network or within the arrangement with the insurance company. That garage will do the repairs and maintenance or whatever servicing and raise the invoice to insurance company, and insurance company will make payment, or customer will get the repair done in the any other garage which is not within the network of the insurance company and will submit the bill to the insurance company will reimburse the amount. Now, sir, first of all, cashless settlement or reimbursement, whatever it is. So, in both the cases, insurance companies are bearing the repairs cost for the vehicles and they will be paying the consideration, and hence they are eligible for ITC. If you see 17 subsection 5 blocked credits, there is an exception for general insurance companies. So, cashless settlements or reimbursement, sir, both the cases, insurance companies can happily take ITC on the repair expenses, whatever they have incurred. Here, the another interesting part is, sir, if they are going for reimbursement, imagine the insurance company is approving only 8 lakhs, but the repair cost is 10 lakhs. Now, when you are getting the repair done somewhere outside and giving the bill to the insurance company 10 lakh, insurance company will pay you only 8 lakhs. So, whatever the approved amount they are paying you, reimbursing you, only on that amount they can take ITC. No matter whether this 8 lakh, 2 lakh has been given invoices separately, approved amount on insurance company and balance amount to the customer, or entire invoice is on the insurance company name and insurance company is paying to the customer only the approved amount and balance it is not paying. In any case, remember, sir, if it is reimbursing, whatever it is reimbursing the approved amount, on that only insurance company can take ITC, no matter how they have raised invoice. But if the invoice itself fully raised in the customer name but not in the insurance company name, then how the insurance company will take ITC? So insurance company cannot take ITC if the garages, the repair and maintenance expenses for that invoice is fully raised in the name of the customer. Even though the insurance company is reimbursing, it cannot take ITC because invoice is not in its name. So that is what another clarification with respect to insurance companies incurring this repair expenses. Next clarification is regarding the life insurance premiums we are paying. Sir, you know, insurance premium we are paying the valuation as per rule 32 sub rule 4 we are doing, and when we are doing the valuation, we will be excluding that investment amount, etc., all these things, correct? Sir, in such case, here there is a doubt whether any reversal of ITC is required. See, the premium whatever you are paying, the value may be like less, we are considering, we are excluding some part of the value, all that, but it cannot be called as a nil rated supply or exempt supply, all this stuff. So, reversal of ITC concept will not come into picture. Even though on insurance premium, on the whole amount you are not paying GST, yes, you are excluding some portion, but reversal of ITC will not come into picture. The next one is respect to registration for metal scrap dealers. Please understand, metal scrap dealers can start their business and they can do business without registration up to the threshold limit, section 22 or section 24 is coming into picture. So, till section 22 or 24 is triggered, they can make the turnover without any registration, and because they are unregistered, making the sales as an unregistered person, opposite party is liable to pay GST under RCM. RCM will come into picture because sale of metal scrap by an unregistered person. If the opposite fellow is registered fellow, RCM will come into picture. Once if the metal scrap dealer is crossing the threshold limit as per section 22 or he is becoming liable for registration under section 24, then automatically they should take registration and proceed, and of course then FCM will come into picture. So that is what that means. Because you are making an RCM supplies, it doesn't mean that you are not liable for registration. Yes, you do business, go with RCM, but once 22 or 24 is coming into picture, take registration, now you will come into FCM. Now there are new conditions or new cases, situations have been added for suo motu cancellation of registration by proper officer. Sir, they are nothing but when you apply for revocation of cancellation, whatever the pending returns are there, those pending returns you should be filing within 30 days from the date of revocation. If you are not doing that, then still again your registration is liable for cancellation. That means I have revoked your cancellation of registration, trusting that you will file all the pending returns within 30 days. If you are not doing that, again yes, I can cancel your registration. That is what the point. So the next amendment is with respect to, see, we know normally when we are paying interest under section 50, sir, if at all there is delay in filing of return and because of that there is delay in payment of tax, we will pay interest only on the net liability, not on the gross liability. That means, for example, gross liability is 1 lakh and ITC I have 40,000. There is delay in filing return and because of that I have paid tax late. So only on 60,000 you are supposed to pay interest. But now there is one more extra point, that is, suppose during that period, sir, from the due date of filing the return till the date of filing return, if you have some amount in e-cash ledger also, then that amount also you can exclude and only on the balance amount you have to pay interest. Suppose from the due date till the date of filing the return, sir, I have balance in e-cash ledger 25,000, ITC 40,000, cash ledger balance 25,000, so total 65,000 already there. So balance only on 35,000 I have to pay interest. That is what the next amendment. Next one is with respect to TDS. See, metal scrap dealers, registered fellows, one registered person and the other registered person, if they are dealing with metal scrap, TDS will come into picture with 2%. But understand, normally two persons for whom section 51 is applicable, between them if anything is happening, TDS is not applicable. But here for metal scrap dealers, even though for both of them section 51 is applicable, and yes, they have to follow TDS provisions. Okay, but others for whom TDS provisions are applicable, between them if anything is happening, they need not deduct TDS. But metal scrap dealers are an exception to that. The next amendment, very small amendment, TCS rate has been changed to 0.5%. Now it is 0.25% and 0.25%. CGST and SGST. Okay, earlier it was 1%. Now it is made to 0.5%. Now coming to the next one, the new one, GSTR 1A, where GSTR 1A is regarding either to add the invoices or amend the invoices which are given in GSTR 1. So this you can do. Suppose if any invoices are like missed out in GSTR 1 or if any invoices are wrongly reported in GSTR 1, you can use GSTR 1A and file that. Or even whatever, including the details given in IFF also, you can amend by filing GSTR 1A. Okay, so what are the features? See, this is first of all optional and this is only once for a return period. For any return period, only you can file once GSTR 1A. Sir, I have did mistakes in GSTR 1A, again I want to file one more 1A, it is not possible. Next, this is only to amend the details of GSTR 1, details of GSTR 1 of the current tax period only, not of the previous tax periods. Next, any changes made in GSTR 1A, the liability for you will be automatically coming in the same month 3B, so you can happily pay the correct tax liability. But the only drawback is, sir, for the customer, for the recipient, it will come only in the next month GSTR 2B, not in the same month 2B. And GSTR 1A you can file only after the due date of the GSTR 1 or filing GSTR 1, whichever is later. Actual date of filing GSTR 1 or due date of filing GSTR 1, whichever is later. From that only it will be open till the date of filing 3B. You can file this GSTR 1. And sir, whatever the return details you have given in first month, second month IFF, that details also, when you have filed your GSTR 1 quarterly, any mistakes are there, you can file GSTR 1A and you can proceed. And changing the recipient's GSTIN is only available in GSTR 1. It cannot be done through GSTR 1A. Okay. Next, how do you report invoices in GSTR 1A? Now, whether it is GSTR 1A or GSTR 1, so reporting of invoices B2B, B2B and B2C large, B2C others, you know that. B2B normally, yes, invoice wise you have to report. B2C large, when we say B2C large, sir, it is interstate supply, value of supply. Earlier it was 2,50,000. Now if the value of supply is greater than greater than 1 lakh, it should be reported invoice wise. If it is less than or equal to 1 lakh, you have to report it consolidated, rate wise, state wise. So I repeat, there is a small amendment in B2C large invoices. Earlier it was value of supply greater than 2,50,000, you should report invoice wise. Now it is value of supply greater than 1 lakh only sufficient, you can report it, you have to report it invoice wise. Remaining things, yes, GSTR 1 or 1A, whatever it is, this is the reporting pattern. B2B invoice wise, B2C large also invoice wise, B2C others consolidated. So when you are giving consolidated figures, state wise, rate wise, you have to give the consolidated figure. That is what the point. Next, the GSTR 4 due date. Actually, GSTR 4 due date, earlier it was 30th April of the succeeding financial year. Now they have changed it to 30th June of the succeeding financial year. The next one is with respect to time limit for export of services. See, when you are exporting the services, you should have received the consideration within 1 year from the export, or as the time period may be allowed under FEMA, whichever is later. After that, if you are not receiving within 15 days, you should make the payment of taxes, because if you made export of services without payment of tax, in that case you should pay the tax along with interest of 18%. Now, sir, when you are applying for GST refund, sir, refund is also available in a case, the new case has been added. That case is nothing but you have exported the goods or services with payment of tax, and yes, whatever the taxes you have paid, you have got it refund, and later on, because of upward revision of price, you are charging more consideration and that fellow is paying it, and further because of that there is increase in GST liability, you have paid that also, that amount also you can take. That means because of increase in prices, whatever the increase in GST liability is there, that you have paid to the government, and whatever has been paid, of course that additional amount also you can claim it as refund. That is the small addition. So the next one is there is a clarification in rule 96A. What is the clarification? Now see, when you are exporting the goods or services without payment of tax, if it is goods, you should send the goods outside India within 3 months from the date of invoice. If it is services, you should have received the consideration within 1 year from the date of invoice. If these conditions are violated, within 15 days from the date of expiry of those conditions, you should pay the IGST on exports along with interest 18%. Okay, that just now we have seen. Now, sir, tomorrow later on, after 6 months or 7 months, I am sending the goods outside India, or after 1.5 years or 2 years, I am receiving the consideration in case of services. In that case, whatever the IGST I have already paid because I have violated the condition, can I claim it as a refund? Yes, of course you can claim it as a refund. IGST paid on exports. Not only that, any unutilized ITC balance, that also you can claim as refund. And sir, what about the interest I paid? No, when I was paying this IGST on exports, can I claim that as refund? Interest when they will give you as refund? No, that is not possible. So that is what the point. So exporter can take ITC of IGST paid on exports because he violated the condition. Now he is satisfying the condition, he can take ITC of refund of it. Next, unutilized ITC balance, that also he can happily take refund. And interest paid on IGST which is paid on exports, that he cannot take as refund. That is what the point. Now there is a new case added for claiming the refunds. A refund is also given for canteen stores department which are under Ministry of Defence. Whatever the purchases they are making, the goods on the inward supply of goods, whatever the GST they have paid, that they would have claimed as ITC and they can claim it as refund. That is what the point here. The next amendment is with respect to any cases, disputes with respect to anti-profiteering clause can be now also heard by GST 80, the appellate tribunal, but only by the principal bench. Now, the appeal to appellate tribunals can be made by the taxpayer or department either manually or electronically also. The next one, very important amendment for you regarding the minimum fees for appealing with GST 80. GST appellate tribunal, yes, of course, not yet set, but still, sir, 5,000 is the minimum filing fees for the appeal and maximum is 25,000. Sir, please understand, if demand is not involved, minimum 5,000 you should pay. If there is any demand involved, we should see per 1 lakh of demand, you should take 1,000 rupees and compare it with 25,000 rupees, whichever is less. So, demand is not involved, 5,000 rupees flat. Demand is involved, 1,000 rupees per lakh or 25,000 rupees, whichever is less. So, the next one is with respect to date of filing the appeal. When we can take this date of filing as appeal? See, memorandum of cross subjects that you can file either electronically or manually if allowed by the registrar and subject to conditions. And what shall be taken as date of filing the appeal? Now, sir, any order which you are going for filing an appeal, against which you are going to file an appeal, if that order is available in the common portal, it is already uploaded now. Date of issuing provisional acknowledgement for you regarding the filing appeal, that itself will be date of filing the appeal. Or sir, the order is not uploaded in the common portal, but the appellant is uploading that in the common portal within 7 days by self-certifying it. Then also date of provisional acknowledgement itself will be taken as date of filing the appeal. No sir, the appellant is filing the self-certified copy of order in the common portal after 7 days. Then date of filing that self-certified copy in the common portal itself will be taken as date of filing the appeal. And sir, you can also withdraw the appeal by filing the withdrawal application. And if you are filing that before the order given under the appeal, then you can withdraw that. And if you are filing a withdrawal application, the appellate tribunal will approve that within 15 days from the date of filing the withdrawal application. Now, sir, the next one is, sir, because of non-establishment of GST appellate tribunals, people are not able to file appeal against the appellate authority's order. So, what the department has trying to tell now, sir, whatever the pre-deposit amount, we will see the pre-deposit, whatever the pre-deposit amount, sir, pre-deposit amount as may be prescribed, that if you are depositing and you are giving an undertaking after the establishment of appellate tribunal, you will be filing an appeal within the time limit given. Then the balance amount will not be recovered, the recovery of the balance amount will be stayed. So, till the establishment of appellate tribunals, you need not worry, you just pay the pre-deposit amount, and once the appellate tribunals are appointed, then you should file the appeal within the time limit, so that balance amount till that time will be stayed, it will not be recovered. Now the next important aspect is, please understand, when appeal has to be filed, suppose there is an order filed by, you have to appeal against an order in front of GST appellate tribunal or High Court or Supreme Court. For department, there are certain limits. So department cannot go and file an appeal in front of GST unless the amount involved there is 20 lakhs or more. Okay, suppose the department cannot go and file an order in front of High Court. Okay, so unless the amount involves 1 crore. The department cannot go and file an appeal in Supreme Court unless the amount involves 2 crores. Now, when we are calculating the monetary limit here about the amounts, sir, if the amount is like, in case of demand, there is tax, interest, penalty, all these things involved or not. If there is tax portion, if they are talking about tax portion and along with it interest is there or not there, all that stuff, sir, we will consider only tax amount. We will consider only the tax amount, the aggregate amount of tax in dispute, that is CGST, SGST, UTGST, IGST, compensations is all put together, excluding interest and penalty. No, sir, in this demand order against which we are going for an appeal, there is only interest involved. Then consider that interest. It should be greater than 20 lakhs, 1 crore or 2 crores as the case may be. No, sir, it involves only penalty. Then only consider that penalty amount. No, sir, it involves only late fees. Only consider that late fees amount. No, sir, it involves not tax but interest, penalty, late fees. Tax is not involved. In that case, aggregate of that interest, penalty and other amounts should be included and identify whether it is going greater than 20 lakhs or exceeding 1 crore or 2 crores as the case may be. Okay. In case of erroneous refund also, the amount of refund in dispute, including CGST, SGST, all these put together, if it is crossing these limits, then you can go and knock the doors of that particular GST or High Court or Supreme Court. These limits are only for department to knock the doors of that respective forums, that is GST, High Court or Supreme Court. To go to GST department, sir, the demand notice should have 20 lakhs amount. Otherwise, for High Court, 1 crore, Supreme Court, 2 crores. That is what the point. Okay, so this is regarding monetary limits. And here one more small thing is, so in any of the order, sir, if there are more than one appeals or demand notices which are settled and the order has been passed covering multiple orders or covering multiple demand notices, then entire the order covering all the multiple demand notices, all that together, put together, whatever is the tax amount, everything, that should be considered, not individual appeal amounts or individual demand notices. That is another important point. Next here, sir, this limits, this monetary limits, please understand, these monetary limits are not applicable in certain cases. What are the cases where monetary limits are not applicable? The monetary limits are not applicable if it is in any case where the GST law provisions are declared as ultra vires the constitution, or in any case where the rules and regulations under GST have been declared ultra vires to the parent act, that is the CGST, SGST act, whatever it is, IGST act, or any order, instruction or notification circular by the government or CBIC has been held ultra vires the rules, or any matter which is related to valuation. This is important: valuation, classification, refunds, place of supply, any other issue which is recurring in nature. Please understand, valuation, classification, refund, place of supply, or any other issues which are recurring in nature, involves interpretation of provisions, all the stuff, sir. In such cases, and any strict or adverse comments passed on the department or the officers, all that, or where it is necessary to contest because of nature of justice and revenue, in such cases, without considering the monetary limits what we have discussed, the department can go and file an appeal in front of GST or High Court or Supreme Court. See, there is a sunset clause for anti-profiteering, that is nothing but 1st April 2025. From 1st April 2025, no cases with respect to anti-profiteering clause will be entertained by anybody, GST, appellate tribunal, principal bench, whatever it is. Okay. So students, hope you have enjoyed watching this quick revision video on amendments. Please understand, I always tell you, please make sure you are enjoying your preparation, not taking it as a stress or a burden. So wishing you all the very best from my end. Hoping to see you all successful in your upcoming exams. This is your Mr. GST signing off. Jai Hind.